What's up, guys? Today we had a very bad day in the market. It went up quite a bit, which means we can't buy any more stocks today. So one of the stocks that I've been looking to buy more of course, is Meta, and it's up 7%. So we're back at $170, probably at least a year, potentially longer. Another stock that I was looking at buying, which is Citigroup. It's a bit too expensive right now in my opinion, but it's at $47 now, up 3%. And even the more retail investor type stocks, which have gone down like a ton recently, are up quite a bit as well. So if we look at Palantir Technologies, it's up 7.7%. And someone asked me in the last video to check out GME stock, which isn't a very good stock, I'll be honest. So let's see, I don't follow it, but it is at $135, which is insane. I can't believe it's held up this well. I thought it would be like $5 again after not that long. But yeah, GME is, let's see how it did today. It's down 4%. It should be down a lot more, to be honest. But today was a good day, so it didn't go down much. And I don't even see a PE ratio on GME, which means it's probably not profitable. Let me check. I wanted to see like 1,000 PE ratio or something like that, but I don't even think it's that good. Okay, yeah, so on the Everything Money software, it says it has a negative 6.3 profit margin, which is like, there's no prospects for this company. So if they're not profitable now, it's just going to get much worse. And the free cash flow is actually even worse than that, which is strange. That's probably some type of, not like intentional manipulation. I'm not sure why that would be. But yeah, the free cash flow is actually lower than the earnings, which isn't a good sign. And then somehow they have a 18% growth this year. This has been such an interesting stock. I don't really follow it, like I said, but let's see. Let's check the news on it, because this is, I heard they were doing like some NFT stuff or something, which is like ridiculous. And apparently they were turning into like a finance company or something like that, which I don't know. I should probably look into that more, but if that's true, that's like completely ridiculous. This is an absolute sell in my opinion. This is like one of the dumbest stocks. Like for the short squeeze, maybe, I don't know, like back in the day, it could have been a good buy, but like based off of fundamentals or anything like that, and since the short squeeze is over, this is like one of the worst possible stocks, to be honest. GameStop will probably, like, it should have already gone out of business, but like I have no idea what they're doing. And then it looks like last year they issued shares. It went up from 65 million to 72 million, which isn't as bad as I thought. Honestly, they should issue like a lot more shares in my opinion, because apparently people buy these dumb shares. So just like raise a bunch of capital while the insane people buy the stock. That's what I would do. If they can't sell digital games at a physical location, then, you know, maybe they'll become an NFT bank. This is like the dumbest stock I've ever seen. So yeah, that's my thoughts on GameStop. If you guys want me to check out any other stocks, let me know down in the comments. And while we're at it, we can also check out AMC. So this dying theater company, it's up 3.4% today, and this has actually come down a good bit. It's only $12 a share versus, let's see what the highs were, $59 a share. So that's at least coming down. And again, there's no PE ratio, which means it's probably not profitable. Let's check out the margins. And obviously these aren't stocks that I'm seriously looking at to evaluate their quality, because I know these are terrible, but I'm just kind of looking at them for fun and sharing my opinion because I know people wanted to know. Okay, so the profit margin for AMC is negative 32%. Now this might be skewed a little bit because of the pandemic, but like, let's check actually. Okay, so for the last 5 years, the revenue has declined 11%, which isn't super bad. Like, that's not a big deal. However, the profit margin for the last 5 years was almost negative 35%. So they're obviously not a very profitable company, and they'll probably go out of business if they don't change something in a major way. They are up in revenue quite a bit this year. It's up 600%, which is like a lot, but it's coming off the pandemic, and they still weren't able to get a good profit margin. It's still negative 32%. And let's see how many shares they're issuing. And they issued an insane amount of shares, a lot more than GameStop. They went from 117 million shares to 477 million shares. So they've about 4x'd the number of shares, and that's just in the last year. They were also issuing a small amount before then. It's kind of up and down. So let's check out their current assets. Okay, we have 1.8 billion in current assets, which is actually way lower than I expected. And in total current liabilities, they have 1.7 billion. So yeah, they have basically slightly more current assets than current liabilities. They have other assets, but they're not current assets. So that means basically they're not very liquid. So they will probably have to issue a lot more shares or take on more debt, which I would definitely, even if I was a shareholder, which I never would be, but I would, even as a shareholder, want them to issue more shares. And their total income was negative $1 billion. So this is like a really, really bad company. So yeah, they have almost 1.6 billion in cash, but then they lost over $1 billion in the most recent year. So yeah, this is very bad. So yeah, I'll probably literally never buy either one of these companies. They'll probably be bankrupt in a few years. And just for fun, we will check out another like meme stock kind of thing, Redbox. This is going to be terrible. I already looked at the financials a little bit before this. So for Redbox, if you don't know what Redbox is, it's like these ridiculously outdated, literally like DVD vending machine things, which is insane. Like, I don't even have a TV. I just watch things on my phone, but like, let alone a DVD player. So like, this isn't even something that people would either want to use or literally even be able to use. For like most people, they can't even use this. This is like a Blockbuster vending machine, basically. I can't believe it still exists. It always surprises me when I see these. And all of that shows in the financials. So if we look at the profit margin for the last 12 months, it's been negative 39%. I thought the AMC profit margin was bad at like 34 or something. But yeah, negative 39%. So like, you give them $1, they lose like $1.50. So this is like absolutely terrible. And the revenue is also very small. This is even smaller than I expected. It's $130 billion in revenue. And off of that, they lose $31 million. So it looks like this was recently listed, because there's not any like information on this. They probably just did an IPO or something. Okay, yeah, because they just have the financials for 2020 and 2021. I can't believe Redbox did an IPO in 2020. That's ridiculous. So it says their total current assets are 65 million, which means they're like really out of money. And if I remember correctly, they're actually being acquired. So that will kind of like bail them out. But I have no idea why the company that's acquiring this is acquiring this. This is extremely bad. There's no turning this around, unless like they just want it for the brand or something. But like, why would you want the Redbox brand? This is like, dude, definitely do not buy the company that's buying this company. I forget what it is. It's called like something about soup or something. I forget what the name is. This is like really bad. And this is actually even worse. Revenue has declined from 546 million to 288 million in 1 year, which is completely insane. That's like an extreme decline. That's like a pandemic level decline, but it wasn't even, that was like at the opposite of the pandemic, because it went from 2020 to 2021 and it decreased that much. So that's like that's insane. And I would assume sales would actually increase coming off of the pandemic, because I know I definitely wouldn't want to touch like DVDs and stuff if like I was concerned about people like being dirty and stuff. So if anything, like if they had a good business, it should have gone up, but no. And then they actually haven't issued any shares, probably because they just went public. But yeah, the shares are the same at 12 million. This is crazy though. I can't believe the assets. So 65 million in total current assets, and then they lost $112 million. So yeah, if it weren't for the acquisition of this company, they would definitely go bankrupt, like basically now. And this is actually insane. The net income, even though they had like half the revenue, the net income, which is the profit basically, actually they grew their losses by like almost double. So they sold less stuff, but somehow managed to lose not just more by percentage, but like more total. So this is absolutely catastrophic. This is like a insanely bad company, guys, and people are actually buying it because of the short squeeze or whatever. So it's at $2. It was at $2. Now it is up. It was past 10. It got up to like, let's see, got up to like $14. So like, I don't know what people are doing. It's probably for the short squeeze, but fundamentally another terrible company. So hopefully you guys like this video. I know probably the AMC and GME people won't like it, but I don't care, because I think this is hilarious. I just love looking at these like really bad companies. So yeah, I hope you enjoyed this video. If you did, make sure you click the like button, subscribe to the channel, and watch out for new videos, because I'll be posting every single weekday.